You're struggling in the market. I get it. I understand. I truly do. The market's extremely tricky these days. You have banks, institutions, hedge funds using multiple ways to manipulate the market. You think the market's headed one way and it goes the other way, or vice versa. So stop. I'm here to give you hope. I'm here to share what tools I use so that I could follow big money, the same thing you could do. I'm going to show you exactly how to use the commands, what you type, where you type them, and what the results mean. I want you to be financially sound in the future. A lot of you started trading and you're like, I'm going to add to my income. But instead of adding, you're struggling and your income seems to be decreasing because you're giving away money to the institutions. Let's stop that today. So first, as you watch this video, write down any comments, comment below. Let me know if you have any questions. I'm here to help you. I'm here to give you hope. All right, so let's get started. I'm going to show you what commands to enter and how to understand them. So let me get that up on the screen. We'll go over them one by one. I'll explain them fully. So let's get started. Here you go. I'm in SOC, Stock Options Crypto Discord. I look under How To, the option flow command. The first one, TR-big flow, and then symbol. It doesn't mean you just write the word symbol. You'll enter whatever stock or ETF you're trying to track the direction for. So me, I love to track the direction of the market. So I'm going to track the direction and use the symbol SPY for all of my queries this morning. Again, the first one will be TR Big Flow, and it's going to show me the 10 largest option positions for today's flow order. So let's get right into it. So I'll go into the flow and algos room, and I'll scroll down to the bottom because we have a bunch of members that use this throughout the day. So I'll type in oops, I can't spell big, but Big Flow, and then I'll type in the symbol that I'm using is SPY. I will hit enter. Now, as this comes up, we're going to pull this up and enlarge it. So what we're going to look at is the biggest flows for the SPY. It's showing us the strike. Let's go one by one. So it's telling us the time. So you got 1246 is the last action. Was it a call or a put? It's green. It was a call. It went to 435 strikes. Now it's funny because the SPY, or the stock in this case, is telling you it's exactly at $410. And they spent $11 million. It expires December 16th. So you could read into all of this information. Me, I like to look at it in general. So B means bid, double B means below bid. Now someone would enter below bid, meaning if they were just looking to get in, they wanted to pay a certain amount, $350 a contract, and it was currently trading at 360 or 370. I'm not overly anxious. I'm not having FOMO. I'm going to wait, entered in. Now it was a sweep, so they swept it across the board. Again, the time of entry, the SPY was at 409.25. The fact that the SPY is sitting at 410 now tells me if I want to be bearish, I'm going to have better entry than that last trade. So again, I'm going over them. I'm counting the number of calls. 1, 2, 3 calls. The total amount of premium spent is $6 million, about $19 million. Okay. None of them were sweeps. Now, sweeps mean you take all the options off the board all at the same time. It's a very aggressive move. So now we look at the sweeps. We have 1, 2, 3, 4, 5, 6. We have 7 put action today, and we'll add up the total there, and we got 5 million. Now we're to 10, 15, we're 20, 21, 28, 38, about 40 million. So again, the amount of the premium on the calls was way under 40 million. It was exactly, I think it was 18 million or 19 million, I said. So understand, more people and there's more exposure to puts, which is a bearish sign for the market. That's how you process it as a whole. Bearish sign, AA means above ask. And let's get back to the how to section again so you can read it with me. The next command that I tend to use is TR flow sum, and then again I'll use the symbol SPY. Now this shows you the summary of statistics of the option flow given that ticker. All right, so we're gonna get in there and let me just pull up flows and algos, and then we go. So we get into the flows and algo room. We go TR. We'll tell it flow sum, and again we're going to use the SPY. We're gonna wait for it to pull up pretty quickly. Now we're gonna expand it nice and big, get rid of the rest of the screen. So now we're seeing the action, calls versus puts, out of the money versus in the money, and buying versus selling. Now understand, as you're looking at options, when you're bullish on the market, you could be bullish in 2 ways. You could buy calls, or they could be selling puts. Both are bullish. On the reversal, if you're buying puts, or you're selling the calls. Both of those strategies are bearish. So let's look at the SPY flow for the day. Let's realize that lately, obviously been more bearish, even though the SPY is going higher. That is what is called a bearish divergence. Price of an ETF or the price of the stock is going up, and the algorithms are telling you that big money thinks it should be going down. As they grow wider and wider apart, that is called a divergence. So let's get to this chart so we know how to read it. We can see, okay, here are the premiums. So the premiums on the calls are, they spent about $83 million. They spent about $122 million on puts. So understand, this could be one of two things. It could be hedge funds, banks, institutions hedging their position, saying, I will buy some SPY puts because my stocks keep going higher. And then let's look at the volume. The volume is a telltale here for me. The volume is 218,000 contracts for the calls and 420,000 for the puts. Again, puts outnumbering calls by 100%, a 2-to-1 ratio. And then we're going to look at open interest as well, which is the third line. And again, you're going to see a 2-to-1 open ratio for puts over the calls. At the SPY sitting 410, as I make this video, it's telling me the market should see some downward pressure and want to go lower. Now let's bring up the third most popular, and everybody loves to use unusual flow, right? Unusual whales, unusual flows are pointing out one thing, another thing. Let me tell you what it does. It lists the top 10 orders where the volume is unusually higher than the open interest. For example, you have 1,000 contracts that have open interest, but the volume for today is 30,000. That's extremely active, making it unusual. We're going to go down to our flows and algo room. We're going to go TR, type in unusual, and then the SPY. Love is using it right there. She just used TR net flow market. So it's another one telling you the flow of the market. So let's pull that one up real quick. Now you can see the puts are going up here. The stock price is in what's in white. The green are the calls. So you can see where the action is right now. And again, there's a divergence. They flipped this morning. You could see it was one way this morning. The calls were a lot higher. The puts were a lot lower. The puts have way outnumbered. The action is extremely picked up. That is telling me bearish sentiment on the market. But let's get back to the one that I was doing, which is unusual for the SPY, and we'll pull it up. So again, this is telling you unusual. Now, what makes it unusual is open interest on these. So let's go to the right. With 6,000 contracts, the volume traded today, 16,000. So again, you're looking at about a 250% from the open interest. And you can see it a little more flagrant right here, a little more obvious, I guess is the word. Open interest on the second line, which are SPY puts, they paid above ask, 350 is the strike. October 7th, which is less than a month away, and they spent about $2 million doing that. But the open interest was at 3,000. They bought or purchased a total of 45,000, which is 1,500 times open interest. So that's pretty significant. Same with the next two lines, about 1,000, and they went 22,500 contracts. So again, you're about 20 times open interest. Same with the next line. We did have a call sweep come in right at noon. Again, they were looking at the 409s. The date, they went out about a month. They went out to October 14th. Again, this is a bullish position. But whereas I mentioned thousands of contracts, there were only 126 open contracts, and the amount purchased were only 550. So in comparison to the puts, it's very minuscule. So again, the unusual flows is showing you it doesn't have to happen this second. It's not instantaneous gratification, but it's showing you that most of the unusual activity is in puts. Out of the 5 golden sweeps were for puts. They paid above ask, bid, ask. When it doesn't show anything, it's a neutral trade, meaning it's out there at the same time somebody's selling and the trades mix. But when you look at this SPY unusual activity as a whole, I'm looking at the call side. I can see 550, about 16,000 open contracts. For the unusual, I'm looking here. Now I'm at 90,000 already. I'm at 91, 93, about 94,000. So again, it is telling me, the unusual flow is telling me market should turn somewhat bearish. Now let's remember, CPI numbers, as I make this video, do not come out till tomorrow morning. So it could be people taking positions in lieu of the CPI numbers, or hedge funds protecting their open interest in their stocks, saying, I want my stock to go higher, but just to safeguard myself, I'm going to purchase these puts. So as you can see, I'm just sharing the commands that I like to use to help me process the market, process the direction of the market, because we all know when we're on the wrong side of a trade, when we expect the market to go up and it goes down, we're giving away our accounts. We're giving our money to the institutions. I want to give you hope instead. I want to give you support. What I'm building is a community of like-minded traders who want to help each other out. Understand, it is us, the retail trader, versus the institutions.